I'm Grady Cool, CEO of Cool Wealth Management. Cryptocurrency is a real asset class, and it could be a great fit for you that you're overlooking. In this video, I'm going to be explaining everything you need to know about whether you should be investing in Bitcoin for you personally. While this may be controversial, cryptocurrency, including Bitcoin, is a viable investment.
The guy made $1 million.
Even though it feels like news, ironically enough, Bitcoin has been around since 2009. That's 16 years. While that isn't the 100+ years of history that we have for stocks, bonds, real estate, it is at least something. It gives us some real data to be able to assess whether this is something that is actually viable or not. Over its history, Bitcoin has increased in value a ridiculous amount, but it has had a profile over the past few years of being about 3 to 4 times as much returns as far as stocks and about 3 to 4 times as much volatility. That type of risk and return profile has some pros and cons, but the fact that it even has a profile is a big deal. Bitcoin has had a pattern of exploding in value over a short period, crashing right back down, plateauing for a while, and then just repeating. The exact pattern and how long it is are hard to predict or how long it will persist, but it does give us an idea of what type of pattern tends to exist. The confidence of having a little bit of history behind cryptocurrency gave companies like ProShares the ability to launch a crypto ETF back in October of 2021. Now even massive conglomerates like BlackRock have their own crypto ETF. With access to crypto being available in a publicly traded security, it means tax-advantaged accounts like IRAs are able to put it in there assuming that it's allowed. Similarly to a stock or ETF, we can take advantage of a ton of different tax options if we do a little bit of planning ahead of time. If the price drops a ton right after we bought some crypto, then we can take advantage of something called tax loss harvesting, which just offsets some of the gains elsewhere in our portfolio. It does mean that you have to have a loss, but it's a nice option to have. If you hold crypto until you pass away, it will receive a stepped-up basis. What this means is that when you pass away, the basis, or the price the government says you're selling it at, will be reset to whatever the current price is. Let's look at an example. If you bought a Bitcoin around $100,000 right now, and over your lifetime, 20 years or whatever, it then goes up to 400,000, and then you pass away, your son inherits the Bitcoin and he goes to sell it, it will now have capital gains based on around 400,000, thus very much lowering his taxes. Neat little trick. The other thing you can do is charitable giving. If you were planning on giving away something to charity, well, you can give away your crypto that has a bunch of capital gains on it instead and still be able to make that donation. Saves you some taxes, but it does require a certain amount of giving in the first place. All of this is to demonstrate that cryptocurrency is similar to a lot of other investments, making it much more of a viable long-term option than was maybe considered previously. Look, I'm not telling you to go make your entire investment portfolio nothing but cryptocurrency. That could be a problem. What I am saying is that crypto is a real option. Personally, I feel like people should invest in what they enjoy since they tend to be significantly more consistent. Realistically, consistency is more important than 50% of what you could be doing, so the psychology of picking things that you like, you understand, and get excited about when you hear about them in your portfolio or see them in the news is more important than most people give credit. If you really enjoy cryptocurrency, then yes, a portion of your portfolio can be in it.
Let's go!
Before I get into where Bitcoin can fit into your portfolio, I do want to address the fact that if you have no clue how it works and every time you hear about it, it makes you uncomfortable, you don't have to invest in it. In fact, you'd probably be better off going to find something that you do actually wrap your head around, like gold or houses. As you can see, a lot of investing comes down to figuring out what works for you. Now, where does crypto fit into your portfolio? A small piece. Because crypto has had such high returns, a small amount goes a long ways. This is much more of a defensive game than it is an offensive one. It's more about keeping your money than it is about risking it for the biscuit on some sort of mega high return. If that's what you want to do, you're much better off investing into your own career or going off and starting some business. Depending on the size of your portfolio, your time horizon, and your risk tolerance, anywhere from 0 to 10% of your portfolio could be in cryptocurrency. Outside of that, sticking to the fundamentals that have created consistent results for decades is going to create much more consistent results for you. One thing I do want to emphasize is that if you do make crypto part of your portfolio, it may help even out the rest of your portfolio if you turn the risks down just a little bit. For example, if I decide to put 10% of my investment portfolio into Bitcoin, maybe instead of having 70% of my portfolio in stocks, I take, 10 or 15%, move that over to bonds. The exact numbers depend on your specific situation and what you feel comfortable with, but you get the idea. At the end of the day, Bitcoin ends up being another viable option for making your investment portfolio more tailored to your specific situation. If you enjoy it, you understand it, and it makes you excited, then yeah, could be a good option. I hope this opens some of your eyes about Bitcoin as an actual option. If you have any sort of questions, please let me know down in the comment section below. If you have questions on your specific circumstances, we'd be happy to help. Other than that, I hope you guys have a good one, and I will see you in the next one. Bye!